The choice between renting or buying a home defines your net worth for decades. Conventional wisdom suggests renting is throwing money away, but this perspective often overlooks the unrecoverable costs that can transform a home from a dream into a financial burden. There is an immense societal pressure to buy, but that pressure tends to mask the reality of the market. It hides the various ways ownership drains capital without building equity. Many households believe they are securing an asset when they are actually taking on a high maintenance liability. Entering the housing market solely to satisfy a cultural expectation can be a precarious financial decision, especially when the underlying math is ignored. To find the objective truth for your area, use the 5% rule. Take the total price of a home and multiply it by 5%. Divide that by 12. That number is your monthly break-even rent. If you can rent an equivalent home for less than that figure, renting is the mathematically superior decision. The math breaks down into 3 specific costs. The first 1% is consumed entirely by property taxes. Maintenance and repairs account for the next 1%, though keeping a property functional requires closer to 2% of its value. That leaves the remaining 3%. This is the silent killer, opportunity cost. It represents the wealth you forfeit with equity trapped in drywall. Real estate prices generally track the rate of inflation. In contrast, a diversified index fund captures the compounding growth of human innovation. Buying a house locks your capital into a single physical location, which carries the high price of missing out on the greatest wealth-building machine in history. Your savings account is secondary to your human capital. This is the total value of your future earnings. You multiply this value through skill stacking. Mastering a single subject is an economic risk that leads to stagnant wages. You must instead acquire a rare, complementary stack of knowledge that the market is starving for. It is a matter of positioning. A marketing expert at a local company makes a living. That same expert moving into the biotech IPO space can multiply their income by 10 overnight. Your mobility is your leverage. It allows you to relocate to the specific environments where your unique skill stack earns its highest possible return. A mortgage acts as an anchor. It physically prevents you from moving to where the money is, effectively capping your potential income. Even with the math in hand, most people will fail to follow through on a superior financial plan. This failure happens because the human brain is a survival machine. It is not designed to process abstract, long-term compounding. The primary psychological trap today is the glowing screen in your pocket. Research proves that the more frequently you check your portfolio, the less risk you are willing to take. Seeing daily microfluctuations triggers myopic loss aversion. Your brain perceives a minor dip as a threat, causing you to sell and destroy your long-term wealth. Becoming wealthy is not a math problem. It is a psychological battle that requires you to become emotionally detached from the numbers. To protect yourself, you need a system. Start by listing your goals, then double that list. Forcing yourself to find 8 goals instead of 4 pushes you past superficial desires to find what actually matters. Next, filter every goal through the PERMA model. Evaluate your objectives against positive emotion, engagement, relationships, meaning, and accomplishment. Without this filter, you risk spending years chasing status symbols, like a luxury car, that provide a temporary thrill while leaving you unfulfilled. The common belief that homeownership leads to higher life satisfaction is not supported by the data. When researchers control for neighborhood quality, the happiness gap between renters and owners vanishes. Ownership often introduces chronic microstress. Dealing with broken pumps, leaking roofs, and contractor disputes can significantly degrade your daily well-being. The roadmap to wealth was solved decades ago. Rent for mobility, invest in your skills, and capture human progress through low-cost index funds. You must prioritize flourishing over status. Simply buy the index, completely forget your password, and go live your life.